All right, so welcome to today's meeting. First thing that we're gonna do is go over kind of like a brief, kind of do like a brief overview of everything, and then get into some like charting some stocks for the week. So I want everyone to remember this right here when it comes to understanding our time frames and time frame analysis. Let me see, where's the notes? Here it is. Okay, so if we have, mind you, this is for day trading. So our 4 hour, the 1 hour is bullish, we should only look for calls. If our 4 hour is bullish and our 1 hour is bearish, we should look for calls mainly. But we can scalp short-term puts into calls, into call POIs. So meaning into demand zones, first lows, bullish 007 zones. And if our 4 hour is bearish, and 1 hour is bearish, we should only look for puts. If our 4 hour is bearish, our 1 hour is bullish, we should look for puts mainly, but can scalp short-term calls into puts POI. So meaning first highs, bearish 007 zones and supply zones. Okay, so always just keep this in mind. So when it comes to calls, obviously we're going to be looking within a bullish range. So we might see something like this in a 1 hour time frame, whereas on a 4 hour time frame, it might look as simple as this. So we have to understand where we are at in the 4 hour time frame first, and then we can go down to a 1 hour time frame, and then we can identify let's be like, okay, we are just on the way down in the 4 hour to manipulate the first low. Whereas if we only looked at a 1 hour, this is going to look very confusing. So let's just say the 4 hour first low on a 1 hour is right here. Now we shouldn't be panicking throughout all this chop because we know price is looking to just to go for this here. So we can be patient and wait for price to go there. So then we know we don't have to necessarily start trading here, and whatnot. So we always want to figure out where we are in the grand scheme of things first, and then we can scale down to lower time frames. So within calls in a bullish range, boom, we just created, actually let's just do this. So let's say here, now we have a new bullish range between this low and this high. Our goal is to figure out where price is going to come back and bounce from. So so obviously this right here is a first low, but let's just say it wasn't. So a couple things we're going to look for is, where's our demand zone? That's one. Where's our 007 zone? There's two. Third, where's our first low? That's three. So these three things we want to look for. So we'll look for one, look for two right here, 007, and then look for three, demand zone. Three things we want to look for. Then as price gets to those areas, then we want to look for either a risk or confirmation entry. We know risk entry is if price just taps in, and we just look for a push and go. Risk entry is risky because essentially we don't have real confirmation because we're just taking it as the first sign of a reversal, which it may not hold all the time. Whereas a confirmation entry is where, let's say, boom, we're creating structure on a 5 minute or 1 minute, boom, look for price to come down, give us a lower time frame shift to structure, and then create the exact same thing all over again, either a first low manipulation or a demand zone tap or whatnot. But that's all within the lower time frames, 5 minute and less. Now, the same entry stuff is applicable for 007, first low, demand zone, whatever. And then for puts, it's the exact same thing, just flipped upside down. Exact same thing. So then when it comes to targets, all we're looking to do is target areas at which price can reverse from. Personally, I like to look for targets on either, let's say, boom, I enter a trade off a 1 minute time frame. I like to look for a 5 minute time frame targets just so I can be safe and, just take my profits. That's why a lot of the trades you'll see me take, especially as of recently, all has okay, well, these are outliers, but majority of the trades you'll see, like here, or sorry, no, that was a big one. Dang, looks like I caught a lot of big trades this week. I didn't, like, percentage wise, but usually I'll go for stuff like 37%, 22%. What's this one? 29%, stuff like that, because I'm targeting things on a 5 minute time frame. So then from there, I'm essentially getting out of my trade, green before any potential reversal spot. So for me, I would much rather do this. Let's say here we have a first high, price comes down. Here, boom, we get a shift. First low, let's just say we had a demand zone here. And let's say I enter here off a 1 minute. Now, what I'll look to target, and let's just say on a 5 minute time frame, we have, so obviously we have our first high. So let's say all this is 1 minute, and then let's say on a 5 minute, we actually need this to break to have a shift in structure, or whatnot, like boom, I'll target this here. After that, I'll target this here. But I'm not gonna just come out the gates targeting up here because, and I feel like this is mainly because I trade same day expiration. So any pullback is gonna kill you. So for me, I'd rather just catch a clean move up to here. Because let's say I just hold this trade and we go like this, they go like this, and this, and this, and this, and this here, and then we shoot up here. By the time price is up here, all this sideways movement is gonna kill my contract. So let's say here I'm up 25%. By the time price goes down, up, down, and price comes back to here, I'm not gonna be up 25%. Might be up 18%, 16%. So I'd much rather secure my profits right here and then look for, because I'm obviously taking profits at places where I think price can reverse from. So then I'm just gonna take my profit here and then catch another entry. So just because you close a trade doesn't mean you can get back in. It's like, let's say I'm like, okay, boom, here we have a first low. Oh, looks like, boom, I exited this trade for 20%. Now I have 20% more money to trade with. So now I can take that money, And let's say, boom, I want to catch this entry here. Now I have an entry right here, and then boom, another clean move, because it's just a continuation of structure. So then on this trade here, I might catch 100%. So that's how I go about things. So like that's why with a lot of my trades, I'll just take the profit and continue on. So like this day here, I remember this one specifically. So price, I think we like just did something like this. We ended up running up. And so these areas are areas where I expected price to reverse from. So we went up here, we pushed down, and then we ended up coming all the way up here. So for me, I would have taken profit right at this first one, waited for a pullback after, and then looked for another reentry. And that's how I like to go about it, because you're literally making sure you're getting out green on every trade. I don't care if it hits the target and it's only 10%. There's 10% more money than what you had in the trade when you first started. So like, I'll give you an example. This guy, he wanted to sign up for the mentorship, and he called me. He was like, hey, like, there's just a couple of things that don't add up. And I was like, okay, what, what's your problem? And it was kind of funny what he said. He said, I've been following you for probably like a couple months, but I don't ever see you post a loss. So he's like, it just doesn't seem real. And, obviously someone that doesn't, it's not in the loop, obviously it would seem crazy, but it's not crazy because I'm not trying to go for huge trades. If I'm up 10, 20, 30%, I'm taking it. And that's how I'm able to be consistent almost literally like every single day. Like I'd say ever since, okay, so let me tell you guys this. So for those of you that have been in the mentorship for a while, do you guys remember, I think this was like a month and a half ago when I started trading with Size, and I was having like 10K days almost every single day. You guys remember that? Yeah, so all I did is I just started going for, smaller, like I just started going for smarter trades. So instead of, for example, like the old me, let's say like 6 months ago, I would have tried to hold this trade all the way up here. And then let's say price came right here and we shot all the way back down. Then I'm like, dang, I just took a loss. But it's like, it's pointless, because if I'm up right here, why would I risk taking a loss? So for me, what I started doing a month and a half ago is taking profits at 5-minute time frame areas at which price can reverse. Because it's like, if the time frames and everything is right and price is going in my direction, it's almost guaranteed that I'm going to get out of that trade green. And once I started doing that, then I started putting on more size to see, hey, like, did this actually work? So then I started playing around with more money, and I'm like, okay, I can be consistent with a lot of money, and it's easy to grow my account. Like over the last 3 weeks, every single Monday, I always start with $1,000. And at the end of the week, I always end up with between $10,000 to $18,000 every single time, because this is all I do. And what I used to do, like, let's say like a year ago, I used to only take one trade in the morning and be done. That's it. But now when you trade like this, you can take 8 trades a day, because there's a lot of setups that'll give you this throughout the day. You can get 20% returns 10 times a day versus trying to get 100% returns. You see what I'm saying? So I'm in the kind of state of taking more base hits because I know it's gonna equal out to a lot more than just one home run trade in the morning. So that's how I go about it. And that's how, I've seen a lot better results within my trading over the last like 2 to 3 months. So think of it like, has anyone, actually, but yeah, you guys get the point. So like, if you implement this within your trading, I'm telling you, it's going to make a huge difference. And the best thing about it is, since we're trading and targeting 5-minute like targets, is it gonna take a lot of time for price to hit your target? No, not at all. But if we're targeting something like a 1 hour target, 4 hour target, and let's say a 1 hour target is all the way up here, this might take 2 hours to play out. Versus if you just start going for the lower time frame targets like this right here, this literally might take like 4 or 5 minutes. And that's how I'm able to take like 8 trades a day and not be on charts all day. Because I can just hop on a chart, mark it out, and be like, boom, here we go. Is there a way to set a sell limit just in case you walk away? There is, but not essentially. So there is a sell limit option, but it's only based on the price of the contract versus the chart. So let's say, let's delete this. So let's say price is, say boom, you enter and price is going up right here. Let's say your contracts are worth $100. And let's say you're like, okay, if my contracts hit $90, take me out of this trade. The trade can still be going up like this. And then literally option contracts, they move off so many different variables. So all of a sudden your option contract might drop down to $90 and then boom, it might take you out even though it still went up. So that's why I don't use that, because it's only based on the contract value rather than the actual stock movement. Now for options, if we had the ability to set real stop losses based on the chart, oh my gosh, I'm telling you, that would be amazing. That would be amazing. Yeah, no, so you can't set a stop loss, because stop losses and all that should be contingent on the chart, not the value of the contract. Yep, no problem. Okay, so now that we've explained that, let's start getting into what we see for this upcoming week. Okay, so literally just as I expected from the other week. Can we go over the Tesla trade you took? Yeah, we could do that. I can talk about, can you go over entries? Yeah, we already talked about entries with the risk and confirmation. So I don't know if you guys remember 2 weeks ago when we did this, but I mean, everything is pretty much the same. So what I said was, here we had a shift in structure. Here we have this supply zone here. And essentially this high is all-time highs. So I believe price is going to go for all-time highs, but obviously price had to create healthy price action, because it would not be healthy if we just went straight up, because we're going to go straight down even harder. So price, boom, push bullish. 2 weeks ago, we established the first low, and then we're pretty much going to chop around a little bit, and we might come down, manipulate first low, and then push to all-time highs. So this is just healthy price action playing out. So that's why I expected the last 2 weeks to be very choppy. So here's our weekly first low. Now that we have that established, and this last week ended green. And then let's throw a 007 zone on this bullish range. Here we have it here. So price was to come down. One area we could probably expect price to go to is 550 area. And we have a first low here, and we have a supply zone. So right now, essentially we just have to wait. So if I drew this out on a diagram, we're technically in a no trade zone. So obviously if we're going to want to look for calls, we know wait for first low manipulation, or continuation on a lower time frame within here that is bullish to then catch a push up. But we also have to keep in mind we still have this first low. So since we're on a weekly time frame, this just shows the area we're at right now. We should not be looking to swing trade. We should not be looking to take swings 3 weeks out, a month out, 2 months out, because we don't know what's going to happen. This next week we could have some crazy news, pushes us down to manipulate the first low, and then we want to start looking for potential swings to then catch the push up. So right now we're just in this weird awkward area at which we don't really want to look for long trades here. This is more so a scalping area. So as long as price is in between, say here to here, we want to be very patient with our trades. So now let's go down to a 4 hour. So here's our weekly first low. So on a 4 hour, we have, here's our push up, just hit the supply zone. Once we broke this low, there's our shift. Here's our first high. We manipulated first high. So let's throw a bearish 007 zone on this here. So price is just, once again, in a very awkward area. So I essentially wouldn't really look for much unless we come to this 007 zone. And also I see once price broke this high here, there's our shift. So we could throw a bullish 007 zone on this right here. So yeah, I would wait to see how price reacts to either this 007 or this 007 and then look to take it from there. Now if we go down to a 1 hour, you can see we have demand down here. And looks like price tapped our 1 hour 007, and you can see here is the low we made in it. So yeah, essentially it's just a waiting game right now. And then here's our lowest point after this shift, bearish, 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 and there's our first high. So for SPY, I don't really see much on higher time frames that I like. It's just in a very awkward area. So all of this is just scalping nonsense. So personally, I probably, mind you, we don't know where we're going to open on Monday, but I'd probably just wait for either first low to break or first high before trying to come up with a actual thesis on where I think price is going to go or what it's going to do. Does that make sense? Perfect. All right. So for Tesla, someone asked if I could explain it. Okay, so let's take this off here. Let me see. Okay, yeah. Okay, so here we had this 1 hour 007 zone. And okay, so just keep in mind, I'm gonna delete this, but just keep in mind all this area is a 007 zone. So, and it's a bullish 007. So all I did, this replay thing is annoying. All I did is just look at this here, as I saw, okay, there's the low, there's our last high, there's our shift. So then down here, I can see, here we have a demand zone. So then from here, I can see, here we have this higher, or this new high, and I see price broke it right here. And then I also see we have this demand zone down here. So right there, there's our new demand zone, just like that. So let's go down to a lower time frame. So for here, essentially all I did, so price opened, we shot up, I saw price shoot down. All I did is just be patient and then just caught the push out of this demand zone. And yeah, we broke it literally just by like a hair, but overall, this is a reaction out of a bullish 007 zone. So like all this is 007 zone. So let's just say here we have 007 zone. So this small break in demand, I'm not really too worried about because overall this is a bullish zone. So then from there, I just caught this push up. Now, as you can see on a 5-minute time frame, this right here is the 5-minute target. So once price ran up and hit this, broke this 5-minute high, that's a target that I liked right there. So then, let me see. Okay, yeah, so then at that point I was up 71%. But, what I decided, so I was going to sell once price broke this target. But I just started, I don't know, I just decided not to sell and just wanted to hold this one a little longer. So as price started pulling back, so even though this is my position, let's say I bought down here. Even though I was up, let's say 60%, this price came all the way back down here. I was almost losing money at this point. And this is why same day expiration is like, that's why I would say like, take your profit as you see. Because if this trade continued to reverse, I would have just lost money on the trade. But within this, we just had another bullish structure. Because once again, this is all coming out of a 1 hour bullish 007. So I just held the trade and then just caught this next push up. And then I decided once we had our first black candle, then I'm going to exit the trade. So I think I exited somewhere around here. And then I ended up closing for, so what, the first 71%, and I ended up closing for 86. So was all that extra holding worth 15%? No, not at all. But I just decided to do it anyway. So like, what, I made an extra $200. It really wasn't worth it at the end of the day, but once again, it was a good trade. It was a very good trade. Yeah, so this was same day expiration on a Friday. So with regular stocks, they all expire on they expire on Friday. Whereas like with SPY and all that other stuff, they expire every single day. So that was the trade for Tesla. So there's the 5-minute target. Boom. Would have been very smart for me to just get out here and then take a re-entry right here and then catch this. Because let's just see what this looks like. So it looks like we just broke through that 007. Let's go down to a 1 minute, see if there's anything here of interest. Okay, so let's just look at, now this is I don't like doing this, but this is very meticulous. So let's just look at candle anatomy. Open and close and highs and lows. So this candle opened here, closed here, opened here, closed here. So here's a low, and then we opened higher, and then we came down to take this low. So if we're just reading open and close, highs and lows, we could use this as a first low. Pop down to a 1 minute. Here's our first low manipulation, and then maybe catch, let's say right here, there's our shift. Here's our confirmation entry. First low right there. Store a 007 zone on this here. Here we have our 007 from our our confirmation entry there. And there's a perfect re-entry. This right here would be a lot riskier only because we don't have anything to take it based on. So if we took a trade here, our stop loss is going to be like down here. Like that's pretty big for same day expiration. So this right here, shift, first low, break, and go. This would have been a second trade to catch. Now on this trade here, this would have gotten us a way bigger percentage return than this trade here when I entered down here, only because we got this strong pullback versus this is all clean. So with the first lows, we're aiming to get a clean move. So like just within first lows are a retracement into a bullish POI. So here's a retracement into bullish POI. There's our clean move here. And then that's where we're supposed to get out. And then we wait for another entry. We had a lower time frame first low. There's our clean move. Here's where we get out, just like that. So I should have done 2 trades on Tesla instead of just 1. So like the old me is exactly what I did on Friday, whereas the new me, I should have done this right here. That would have been a lot smarter. You set alerts or targets? Nope, I don't set alerts. I'm always watching it when I'm in the trade. What's your analysis going on Tesla into next week? All right, so it's it's looking a little scary right now. But so here we have this high. It came from this low. Here is our shift to the downside. Here's our first high. Looks like we manipulated first high and now we're pushing back. So essentially we're just looking to create a first low. So we're within a bullish range on a weekly. On a 4-hour time frame, here's our highest point, and we just shifted to bearish on a 4-hour. And let's go down to a 1. Yeah, I don't really see much there, but yeah, so we just shifted to bearish. So essentially, now's price may come down. You have to see how we react to this bullish range here. So it looks like for most stocks it's pretty identical to SPY. So like here on Nvidia, 4-hour time frame. Oh wait, actually I'm tripping. I didn't realize the replay mode was on. Okay, yeah. So it looks like we already broke that, yeah. So right now we're back in this old bullish range. Got this demand zone here, so we'll have to see how price reacts. So like with Nvidia, we just shifted to bearish, so we got to see how price reacts to it. And then on a weekly, looks like the same thing. We just took out this first high, like just by a hair. Now price looking to come down, maybe create a first low. So diagram, this looks like this. Price ran all the way up, boom. And now we're having our first pullback because we just took out this first high. Now the bullish range that we got to pay attention to is here and here. So now we're going to look for demand zone, 007 zone, and look for a first low to be created. Just like that. All right. So yeah, it's pretty much everything going into this upcoming week. If looking to be scalping, would main time frames be? Yeah. So I look to enter on a 1 minute and then look for a 5-minute target. All that good stuff. You guys enjoyed today's meeting? If you did, put a W in the chat. Nice, nice. How do you slowly exit a trade? That would be like, let's say you had 10 contracts, you could sell three, you could sell one, you could sell like instead of just selling all at once, but I don't do that. I just when I'm ready to get out of trade, get out fully. Fully. Alright, so yeah, that's it for today's meeting. We ever do trade videos on YouTube again? It's so I'm not gonna lie, it's a little bit harder now, only because majority of the time, like I'd say 90% of the time, I'm trading from my phone, not at my desk. So like I'll either be like for example, this right here, this trade right here, I was not home. I was out and about. And like this was a nice trade, but like I wasn't home. This trade here, I wasn't home when I did this one. So like almost all my trades are on my phone. So like for me, I'll go on Robinhood and TradingView on my phone. So I'll just chart it out, look at it, boom, and done. See, like I'm always just doing something and just trading along the way. So yeah. So I'll upload the recording of this and I'll see you guys in the Discord. Would you be open to doing some live trading sessions? No, I don't do that only because there isn't any benefit to me live trading with someone else because it's only gonna add like just more stress. Like I like trading is something you want to be peaceful. Like I don't want people to be asking me questions about wait, like I thought this, like why are you taking like it's just gets a little too much. So yeah. So I'll see you guys in the Discord. I'll upload this recording. And if you guys have any questions, once again, feel free to ask anytime. All right, see ya.